Okay, since it is live on YouTube, I'll drop as a host. Okay.
It's not live on YouTube.
Arvinder, you are on mute.
Arvinder is left.
Ravi, can you see why it's not showing their videos?
Okay, video is still not solved.
No. I have updated in the settings, but it is not showing. They're still not able to do it.
नूर यहाँ पे
We can make them all co-host.
यहाँ पे नहीं ये वीडियो नहीं आ रहा होस्ट की नहीं ये मैं कर रहा हूँ तो किसी का भी नहीं आ रहा it's not happening
आ गया तो let's make him host probably then he'll be able to
Devanshi, you try for yourself. You are a host.
So what should I do?
No, it's okay.
share video.
No, hold on. Let me make. Devanshi, you are host. Please make Rupinder co-host, and then let's see, or make Neeraj.
Yeah.
Neeraj, try again.
Yeah, it's come. Okay.
That's also bring Rupinder back.
Yeah. Just hold on.
And also make Ashima host. Ashima, you can also be on video then.
So I'll make Rupinder host.
No, you can make him co-host.
Rupinder, you can switch on your video now.
Yeah, I'm doing, but still that message is coming up.
Okay.
Now you can do.
Yeah, great.
Okay, we are good then.
Great. Sorry for a little hiccup.
If you want, you can drop. Either way is okay. Yeah.
Okay, Arvinder, I'll drop as a co-host. Okay.
Yeah. I can see people are joining us still. Or maybe we can give for a couple of minutes.
Yeah, we can start. I think.
इस तरफ से
Yeah,
ना
minutes ago.
इस तरफ से लाइट कम है
Neeraj, shall we start? We are for 5 minutes.
I can see people are joining still. The 25 guys. Maybe just for a couple of 2-3 minutes more.
I think let's start, Neeraj. I will start the recording as well now.
Okay, great. Thanks. Good morning, everyone. So, Ashima, maybe you just kickstart.
Yeah, thank you for joining us today. I'm Ashima from DFAN. And as you all know, today's session is creating value for startups. Giving you guys a brief about our company, we are around 120 members company, and we invest into deep tech, B2B and B2C startups. And that's about it. So over to you, Neeraj. He'll be moderating today's session. And if you have any questions, just put it in the chat box.
Thanks, Ashima. Thanks, guys, for joining on the Saturday morning. It's a wonderful time also if you see, and today is the first day of Navratra. It's a good auspicious day for everyone, even for founders, for angel investors, and people who are in the corporate world. It's a good learning platform. And just to have a quick introduction about Rupinder. So Rupinder and myself, we started a career together 25 years back. And then Rupinder has moved. I learned from Rupinder 20 years back the word VC, which I was not aware of it. No, it's like it's a dream and then the thoughts and then actions, right? That's what Rupinder has built in his career. So he also has his 25-year of career, which he has worked in the corporate world, and then he started his own venture, which is primarily into the biotech space. So he ran this corporate for 20 years, right? 15-20 years, Rupinder, right? So then you biotech, which is you're running this firm, and plus he also invested in a couple of startups, which he has gone 15x as ROI. So I thought, Rupinder, let's give share the experience to the people. How did he achieve those goals? And even he has experience of both. He has experience of startup as well as an angel investor also. So he's a good combination of both. If somebody has to take a learning from Rupinder, it's a right platform, and you can reach out to him also directly. He's running his own YouTube channel, and he's helping a lot of startups, founders to mentor. And recently I saw his video, which is, he mentioned about 4 category of sales. So that's wonderful. Maybe Rupinder, I don't want to hijack your time. You kickstart, please. Great.
Yeah. Thank you so much, Neeraj, for that wonderful introduction. I'm excited equally, in terms of knowing you for last so many years, and I was always impressed with you as a Bitcoin topper, and so thank you very much. Thanks, Harvinder. Thanks, DFAN, for giving me this wonderful opportunity to connect with people, who really want to take deep dive into investors' world, particularly on the investing with the startups. Today's my talk. I'm basically going to focus on seven bullet points, which are very important. If you are investing into startups, so these 7 points are going to be of immense help. Same way, if you are planning to have a startup, or you are trying to mentor a startup, there also these 7 points are going to be extremely helpful. I will try to keep it very precise, and stop me if somewhere you find a disconnect. So let's begin the journey. I would request for the next slide. So the first and foremost, when you have to learn the game, and today my main idea is to learn, basically, because learning is a two-way process, and we all learn from each other. So I'm going to share my learnings with you. At the same time, I'm also looking forward to very constructive feedback from all of you. You can drop a message, you can ask questions back. So whatever I have learned, I intend to share with all of you today in this particular small talk. And the same way, I'm hungry for learning back as well. The first and foremost, the important point which I have observed over the years, you should be investing within circle of your own competence. Everybody has some passion. So people keep saying that do something which you love and which you can do 24/7 into 365, and which you can do only if you have true passion for the same, for that particular field. Same way in the field of investing, you should invest into something which finds a lot of connect with your ambitions or your goals as well. So just investing for the heck of investing, I would say don't go for that. Go with the area of your expertise where you can understand the nuts and bolts of that particular industry, that particular business. And I think DFAN is such a wonderful platform where, if you do not know the nuts and bolts, you have a lot of competent people around here who can help us with learning nuts and bolts of that particular business. They can help you with due diligence. Now, let me give you an example, of competence, or why it is very important that, you stay focused on your expertise area. So let me begin by taking example from the nature, because, I come from biotechnology background. I was a gold medalist from Punjab University, Chandigarh. So we all begin our life from one cell. And if that one cell keeps dividing randomly, think about it, we will become a ball of cell, or we will become a heap of cells, lying somewhere in the corner. But that doesn't happen. The nature is so beautiful. The biology, the programming of DNA, RNA cells is so beautiful that a beautiful human being is created from one cell. And if we start our life from one cell, why do not we become a plant or a monkey? just because, you know, the DNA has got the whole thing programmed, you know, so we start from human DNA, so we end up with a beautiful human being with 2 equal hands. You know, we don't have 3 hands. Our fingers are not fused. You know, if the cell which was supposed to die at some X specific million number of division, if that division does not stop at that particular moment, my fingers will be fused. If my nose cells just keep dividing, you know, it will keep growing, but that doesn't happen. So the point which I'm trying to make here is that even nature uh, revolves around, you know, a very well programmed uh, circle of competence. You know, if anything goes haywire, you know, it will be a cancer, or it will be disease of immune system, or something else, you know. So what I'm trying to say is, please stay focused on your area of competence or passion, you know, the business which you fairly understand. If you do not understand, ask somebody else. But it's really important to be around that particular passion area. um, Recently I was hearing Mark Zuckerberg, and he said that, you know, a lot of people talk about Pareto's principle, you know, 80-20. So everyone says that, you know, uh, so you focus on 20%, and then 80% will fall in place. But he said that that 20%, which is your passion, should be done so very well that it should expand into 80%. And he gave example of Facebook. He said Facebook creates such elegant and beautiful data. So, you know, they put their heart and soul into that particular work which they do. So similarly, in the field of investing, you know, do not invest in anything and everything which is due to hearsay, or somebody has recommended you, or somebody has made money. Don't go with all that crap, you know. You first find out, you know, are you able to understand the business? Is it connected to something, you know, which you can monitor on ongoing basis, evaluate, mentor? uh, so those things are extremely important. uh, so there is no overnight success, so you need to put uh, n number of years, n number of efforts around that passion, uh, around that circle of competence, you know. Like, you know, in the cricket, you hit the ball which comes in your sweet spot. You know, you will have a lot of temptations, but don't go after each and every ball. Otherwise, you know, you will get your wicket done. I mean, you know. The point number 2, which is very important this morning, I would like to discuss with the audience is uh, startups with durable competitive advantage. So it's extremely important for you to understand that, you know, the team or a startup or somebody who is approaching you for funding, you know, is having something which is having competitive edge over competition in the market, you know. What I'm observing and what happens generally, like for example, these days, you know, education is buzzword. So everybody wants to invest into education. uh, but my take would be, and my advice would be, that, you know, just don't go after the field or subject, you know, just blindly. What you need to uh, uh, gauge is that particular startup or team has some competitive advantage which is going to be there for decades, you know. For example, you know, when Warren Buffett invests, you know, he says that we find out the companies which have got a competitive edge, and it lasts for several years, you know, decades, you know. So when somebody is coming for taking investment from you, please make sure that you are able to analyze and ensure that that particular startup has advantage and which will stay or increase over the years. So that's extremely important point. Point number 2, uh, go with those businesses, you know, which are having competitive advantage, which are offering much more value uh, compared to the competition, and they have uh, necessary business acumen and team which will ensure that that competitive advantage stays and multiplies over the years. So that's point number 2, which I think is extremely important. Number 3, only those startups or assets which have got solid cash flow and margin opportunity. I have worked with several multinationals. I was heading $8 billion Irish multinational carry for Asia region. Prior to that, I was with BD and I was heading India region. But at times, what I have seen is, most of the guys who have worked with MNCs or companies which are doing very well anyway. So we tend to forget or oversee the cash flow, how it moves, because we are most of the times putting everything on CFOs or finance directors, that somehow they will ensure the cash flow for the startup, for the organization, for those MNCs. So in the process, we end up ignoring, extremely important point for the business, which is ensuring that there is a solid cash flow which is existing for that particular startup. Either it is existing today or it will be able to ensure that in the future. And I will give you my example. I started my company 11 years back, and we were growing very fast. We were kind of one of the fastest growing biotech supplier organization in India. And you won't believe it, for first 4 to 5 years, we were mad about revenue, top line, and we were never looking at margins. We were not looking at receivables, and we never thought of cash flow, plotting the cash flow, how is it moving? So my brush with entrepreneurship, though I knew cash flow, though we all read about cash flow and all in the management, but then you don't practice it, when you are doing yourself. So the first major jolt was when somebody arrived, one of my investors, and he said, Rupinder, show me your cash flow and plot your cash flow for next 3 years, and also want to see the cash flow which has happened for last 2 years. And you won't believe it, that was a rude shock. So it's extremely important for us to measure how we are burning the cash or how we are generating the cash. If cash generation is good, that's a very good indicator that you should be investing in that particular startup. While talking to the promoters, if you do not get that feeling that, somehow these guys are going to take care of cash flow and margin, wait. Either you talk to them, engage with them in a very constructive manner, so as to either teach them, inculcate the cash flow and margin thing. Otherwise, if that is the blind spot, I would say, don't go for it. So very important part is to analyze how the business is going to do on the margin side, how business is going to churn out cash, how the cash flow is happening for the company. A very famous story which people keep talking is, there was a Raja, and most of the Rajas, they don't count much, they don't use commercial acumen. So one of the saint comes and says that, Rajaji, I have come to you, for meeting. And Raja says, mango, kya mangna hai? So he said that Rajaji, aise mat bolo, aap de nahi paoge. So he said, what are you talking? I'm a king, I can give you anything. So he said, okay, chess has 64 squares on the chessboard. So aap aisa karo, put one rice grain on the first one and then just keep doubling it up as we move forward. So Raja said, what are you asking when, given? Raja did not analyze that, what he is promising is going to kill his empire. And by the time you reach 64th square, I don't know, the mathematics guys would do it better, so probably 2 to raise power 63 or something number of grains. So, everything goes. If Raja has to give those kind of grains to him. So the moral of the story is, you should be, as an investor, should be able to see through and analyze what you are committing, and how is it going to last. So you should have that solid acumen, not only in you, even the promoters and the team with whom you are investing in. I mean, if they are not having solid commercial acumen, they can do business well in good times, but they will perish in the bad times. Like somebody has said that, plain sea, never makes good sailors. Good sailors happen when there is a rough sea. So similarly, when the rough sea will come, people who do not have commercial acumen, they are bound to take wrong decisions and they will go down the drain. So very important, extremely important, I would say. Number 4 point, evaluate team and company. So when somebody is coming that, okay, fund me for something, for my venture, and I have passion, I have fire, I can do this, I can do that. What you need to see is that whether this team has got the right kind of experience and expertise. Experience with the right kind of fire. So it should be a good, the team has to be a good balance of experience, commercial acumen, and people who have got a lot of fire and they want to do something in their life. So that has to be the right combination of team which can pull it through good and bad times. I would say bad and good times, because initially when you start a startup, first 2-3 years, it is actually bad time, and good time will come only when you will have positive cash flows coming in, when your business is consistently growing and giving returns to the investors. Also, another important point which I generally ask, most of the guys who start first time as a startup guy. So I ask them, have you ever made any money in your life? Bachpan mein, have you done some small deal? Do you know how to increase your money or create profit? Because it's good to have passion, it's good to have fire in the belly, it's good to have desire. But if you are not good in selling yourself or selling your stuff or selling your company, or so if you have not done anything worthwhile which was commercially excellent in the past, so this time you are challenging him that this is going to be the first time you will have to show up that you can create value. Because promise is one thing, but so you need to see their past. They should not be quitter. They should not be like starting one staff and then after a few months going for second one, third one. So they are moving from failure to failure and getting frustrated. So you need a guy who can stay on the pitch, who can wait for the right ball, who can sail through the difficult times, or somebody who has got who has created value in the past. So it's extremely important to evaluate the team. I would say, team comes first and then will come the company or a minimum viable product. So please evaluate the company in terms of the team, in terms of the promoter, in terms of their track record. And if they have already created value in the past, there are high chances that they will be able to do so this time, though there is no guarantee to that, but at least they have seen it once. Or for example, if you have some very good star students coming out of premier colleges and all, so they will be very sharp and they are the right people. But if it is also balanced along with experienced guy, who has done these things in the past, so that makes it a deadly combination. So point number 4 is evaluate team. That is extremely important. Look at their past record. Number 5, invest. Do not gamble. Most of the times we all think that investing is like signing the checks, and it will happen or it will not happen. You look at all the guys who have a lot of money in investing, they never gamble. They assess situation from current perspective, from long-term perspective, and only once they have said no to 100 things, they are going to say yes to 101, just because they have assessed it very well. So that is investing. Investing is all about seeing everything, going through the whole book, looking at the balance sheets, looking at the potentials, looking at competitive scenario, almost everything. When you have done complete assessment of whatever is there on the plate or platter, so then only they will pick up something which really makes value, which really makes sense. For example, we all again learn from the best masters in the world. So look at Warren Buffett. He will pick up Coke not just like that. He did an assessment from the when he was a teenager. When he was trying to see that how many Coca-Cola bottles are being opened at that particular small vendor machine. So from there till today he holds it. So same way, if you are investing in some startups, be very critical and careful about whom you are choosing, and then stick with them over the long run. Mentor them, be part of their journey, assess them at every step. So investment is not about gambling, because most of the people think that they can be good investors. You, me, lot of others generally fail because allocating capital is nothing, but allocating capital at the right company or organization or team, that is which is going to bring value for you. So please ensure that you are investing, you have done your due diligence, you have understood the rules of the game, you have understood that particular company in which you are investing. So then I think then only you should be doing it. Just to give you another example, there are a lot of supercharged derivatives. There are a lot of index funds and all, which lose value 70-80% in one market crash. So don't go with all that. Same with the startups. You may have a lot of fancy startups coming to you for the investments. Don't look at everything which is coming your way. Please be very clear about the analysis part first. Commercial acumen, use your commercial acumen, assess them, see if they can carry it on for years and years, so that you can generate value from that particular startup in the long run. Point number 6, and which is very important, I have learned it hard way, myself as well. Negotiate hard and judge. The point which I'm trying to make is, when you have startups coming for raising capital, when you ask them relevant questions, try to negotiate with them, and then you see how they behave. Because negotiation is an art, and for an entrepreneur or a startup, negotiation is key thing. You need to know how to maintain balance between getting the right value and at the same time not losing the customer or not losing the deal. So lot of understanding you will gain when you will put startup promoters on this turf, that you try to negotiate with them. Some of them you will see they will ask for astronomical values, and they may not have a product in place. They will not even know how they are going to do the execution part of expanding their company or their services or their consultancy. So some of them will ask for moon. At the same time, you will also come across some people who will be giving away things just like that. So both the cases, I think, it should be a no-no, or, we need to teach them or inculcate them, that particular skill. Because when you will start negotiating with them, when they are coming with a valuation to you, when you start negotiating with them, you can observe their winning strategy of negotiating the best value from them, from the customers or from you, and at the same time not losing the deal. So if you come across a set of people who are very good in balancing this and getting deal for themselves, getting deal from the customers also will not be difficult for them. So they are the guys who will bring a lot of value for everyone. So go with those kind of guys, test them by negotiating with them and see how they behave, and then you make your assessment that yes, these are the right guys who can find the middle path, who can create value for you, for their organization, for investors, and then they can ensure ROI for the project. Point number 7, and this is something which I have seen over the years, and a lot of us, including myself, we do that mistake when we are going for investing. Oftentimes we think that investment we will do, and then over the time it will increase in the value. But I think that's a wrong strategy. We should create value when you buy, that time itself. So most of the guys, for example, we all have a lot of experience in investing in real estate, or sometimes investing in stocks. And what we feel is that today we are investing at X. So it will anyway move up over the time from X to Y. But that may happen, that may not happen. So the best thing is you should create value when you're buying. So you should be able to do, make a deal, keep money on the table, but negotiate there. Try to create value by buying that particular startup or that particular real estate or that particular piece of stock at the right pricing. It should be below its intrinsic value, or at least it is close to its intrinsic value. So you have this opportunity to enter because you have money on the table. You're going to sign check for that particular asset or a company. So try to see if you can create value that time itself, because that time probably the other party is needing that fund, and that's why they are coming to you. So rather than waiting for your investment to increase over the years, the best idea would be buy value by getting at a lower price than X, at that particular point. So if you keep these 6-7 points in mind, and if we keep practicing this, I think we can become a better investor over the time. Can you go to the next slide, please? So the point which I am trying to make here is either you are investing in a startup or you are creating a startup, because when you are investing in startup, for you also that's a startup which you are beginning from that day, for yourself. So in either case, you are investing or you are creating an organization or startup yourself and seeking funds from outside. There are 4 or 5 basic things which you need to really ensure in the right sequence, and then put your best effort, best foot forward, and I'm sure it happens. It may not happen in a year, it may not happen in a day, but if you keep going, it will happen. So for everybody's benefit, I have compiled these 4 or 5 points. If we keep these in mind, I think it will be of great help to anyone who wants to go for startup, or somebody who wants to invest in a startup. So first of all, you create yourself a great story. Everything starts in mind, and I am not going to talk about some of the incidences which happened in my life, so there's a book by Rhonda Byrne's, Secret Book. And when I first time read, I thought, oh, how can this happen? But I've seen myself, and I think I will share with you at a later time. But what is very important is that we must execute. We can execute a good story only if we have that great story in mind first. So Taj Mahal was first built in the mind, and then it gets executed, on the ground. So similarly, for yourself, for your startup, for your investments, or your aspiration to become a VC, it's very important that you first think about that particular goal in mind very clearly. And once you do that, then right things will happen for you automatically. And for doing that, what you should do is, as we talked in the last slide, find out a passion, find out an interest area, and put your best efforts in that particular field. When you keep doing this, so as I was saying, there is nobody who becomes overnight celebrity or overnight success. Every overnight success is 10 years or more. So once you are very clear on your goal, which is point number 1, you have thought about that particular goal or a passion or an investment or becoming a VC, what you must do is now put your best efforts into that particular field continuously without thinking of result. So once you do that, you will start becoming expert, you will start learning the ropes, and as you learn the ropes, you will start climbing. Now, when you have passion, when you have started expertise development around that passion, that investment, what will happen is you will start becoming bigger, better in your game. So keep doing that and keep raising your energy. Go up, 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 up with efforts. And what will happen eventually? People will start noticing you. And when people will start noticing you, they will appreciate your energy. They will appreciate your efforts. And then when they will appreciate, they will start attracted to you. So a lot of good people, a lot of potential, value creators, friends, they will start getting attracted towards you when you raise your energy with your efforts. So when they arrive, you build them. And that is the criteria of success. You do something which you like and take it to the peak, keep increasing so that people get attracted. When people arrive, you build them. And that is how you build your image. That is how you build success for yourself. And once this starts happening, keep your focus intact. And focus, I was reading some book and a lot of you must have already read, focus, which is FOCUS. So follow one course until successful. So what I'm trying to say is, for example, in our case at DFAN, if you have started investing, if you have started analyzing startups, keep doing, keep raising your energy and follow one course until successful. So some people, what they do is, they become better at something, and by the time they reach some level, they shift it to something else because somebody else is giving them a better example. Then they shift to something else. So then you won't be able to create a good story for yourself. So follow one course until successful. Do more and more of it. Create more and more money out of that. Number 4, never give up. Because somebody had said that the success is all about from moving from one failure to other, continuously without losing interest and focus. So you will have a lot of roadblocks, you will have a lot of bumps, you will have a lot of bottlenecks, but do not give up. So what I'm trying to say is, in the field of investing as well, you will come across setbacks. You will have some of your money not producing the kind of results what you want. But if you live in between, then whatever you have spent is all gone. So do not quit in between. Keep going so that you can reach that level of success which you desired in the beginning for yourself. To summarize these 4 points, one of the book which is very excellent book, and I'm not mentioning the book right now here, but it said that TFAR, so thoughts. So you first think, so that creates thoughts. Like I said, Taj Mahal was first built in the mind and then gets executed. Similarly, investment, similarly your careers, money making, first thoughts. Thoughts are extremely important. When you will have thoughts, positive thoughts, then feelings will come, So then you start feeling that, okay, that's my goal. I think I can do it. So when you are thinking about it, feelings have started coming, then feelings get converted into actions. Because you're dreaming about it, you are having a feeling that yes, you can execute this. For example, in the field of investments, If you do 2 investments and they go down the drain, you will feel that, oh my God, I'm giving up. No, if you are very clear about your goal, how are you going to do it? At what time, success can happen? It may be delayed, but it cannot be taken away from you completely. So thoughts, feelings will create actions. And once your actions start happening in the right direction, results will happen. So TFAR, that's the sequence. Every goal starts in the mind. You need to execute it. And if you execute it well, it goes to perfection and it creates results for you. So those were all, 35, 40 minutes I thought I will be discussing with you today. I am open to the questions as well.
Yeah, thanks, Rupinder. It's wonderful. Even I start dreaming and doing actions and then getting into those. So the passion, yeah, that's what driving everyone. So if there is no passion, even in your business, even in your corporate life, or even whatever you're doing, even with the kids, right? So even kids also, they don't have any passion, so they can't grow in their career also, which is the mantra. And the way I was engrossed in your discussion, I start feeling from my childhood to my entrepreneur to the corporate world. So that's great. So thanks, Rupinder. And there are some good questions. Maybe I will open up. Let's have a very open discussions. Maybe I will open up on the panel, not in the panel, with the audience. Let them speak. That is better. So I can see a question from Harvinder, right? So maybe Harvinder, you can, you also did. Yeah. Maybe Harvinder, you can. Harvinder, you are on mute.
Yeah, thanks. So hi Rupinder, it was wonderful listening to you. Thanks for doing this session for us.
Thanks for the opportunity.
Yeah, my question to you was that when an early stage startup approaches you, right? So how do you evaluate the team? You said one of the 7, you said evaluate the team, right?
Yeah.
Given that in the current times, we are all meeting each other virtually mostly, right?
Yeah.
It's very difficult to meet the founders in person and get to know them better, because on screen, most of the people will be in their best form. That's not their natural environment, right? So how do you get to know and evaluate the real them and the real team for taking an investment call in the current time?
Yeah, so that's a very good point, which you have raised. So Harvinder, it actually starts from the moment somebody approaches you. For example, I will share with you, yesterday somebody sent me a pitch and he's sending it to me, and then he's saying that if you are interested, if you are interested to really, talk further on this, please do call me. So it was like, wo mere pe ehsaan kar raha tha. So the point which I am trying to make is that guy has to be hungry for growth for day one. While reaching investors, he's so casual. He's saying, if you are interested, then call me. Otherwise, I don't know how the guy will sell his company, his brand, his value proposition to the customer. So every single point when you observe, you make an assessment towards the commitment to the cause. So for somebody who has a passion and he wants to raise a company, big company for himself and investors, he should have so much passion that, he should be able to, he should be convincing me or anybody all the time for his product or his venture. So small things, and you have to assess at every stage. As I said, you need to look at their past record. You also need to look at whether they should not be quitter, so there are n number of things that's a very vast field we can discuss.
Sure, thanks. Neeraj, you can pick next one. Neeraj, you are on mute.
Oh, sorry. So I just unmute. I'm doing unmute to Guru Mysore.
Thanks, Neeraj. I hope is there a disturbance on my microphone?
No. Very clear. Very clear.
You're audible, Guru.
Okay. Rupinder, this one question outside the investment world. At the start of the session, you gave an example of nature. Do you see COVID-19 pandemic is kind of a corrections because humans have not learned to respect nature?
Absolutely, that's nature's way to show us, the right way. Because man was going out that we were creating devastative effect on the earth, and somewhere it has to correct. So nature has its own ways, and COVID-19 is one example. There can be n number of things, and what I have seen is sometimes opportunities come out of problems. So COVID-19 became a problem for a lot of people, but there are startups who have made 100x value just in the course of 6 to 7 months. A lot of these healthcare biotech companies, they have raised a hell lot of money by using that opportunity. But coming back to your question, absolutely, I think nature is trying to correct itself from time to time.
Okay, there's a question from Rakesh Kalra. So Rakesh.
Yeah, morning. Thank you so much for a fabulous session. But
Morning,
there was, one thing that I wanted to ask. I know might sound really direct, but education, yes, seems to be a buzzword. Edutech seems to be a buzzword, and the good thing is, somewhere I thought it won't last too long.
Yeah.
But then, yes, there are players who are doing well, simply learn and all.
Yeah.
What do you think are areas that could last long? I know it's probably a study that I should be doing, but since we're in the session, just thought of asking, what areas could be long lasting? Because I am actually at a juncture where I'm deciding whether the next employment or actually move to entrepreneurship.
Yeah, Rakesh, I think that's a very good question for the complete audience and all of us. So edutech is one area which is going to last. One, because we have huge numbers. We are one of the youngest nation in the world. So we have so many people who are to be given education, theoretical education, practical education, online education. But the mantra is, as I said in one of my points, the differentiator. So there will be a number of people who will come in edutech. But what in edutech? How are you different from the other guy who is raising millions of dollars right now, be it an academy or be it somebody else. So the differentiator will put you ahead of those. That will give you moat in the long run. So education, I feel, is one area which is going to stay very hot. Artificial intelligence, data analytics, healthcare. These are some areas which are having a lot of scope as we move forward, and we have competent folks. So many hands to make it happen for India right now.
Thanks, Rupinder. That's perfectly matching with our DFAN theme also, the ed tech, health tech. So these are new areas. So let me give another question to Sumit Chavda. So Sumit.
Yeah, hi. Great session, Rupinder. My question is that you've talked a lot about how to judge the company, the team based on their track record, based on their performance in the past. But how do you judge basically first-time founders, first-time promoters, or a company which have founders who are doing this for the first time?
Yeah, so first time, I think you need to spend time with them. First time is a little difficult, but I will just give one example to Harvinder, and I will give another example to you. One of the promoters who came for the first time, and I started discussing with him, and he lost his temper, almost. So I could assess it that the guy who is losing temper so fast with the potential investor or mentor, how will he really sell in the market? So there are a lot of things which you need to assess. And the best thing is, you spend time with them. I will give you my personal example. I have investors. One of the guys, ex Morgan Stanley, MD for Asia. I will not take his name here. Similarly, I have somebody who had gone all IVF UK to India. He sold it back to them. One of the guys CFO for a very big group in India. So what they did was, and what we all should do is, we should to spend quality time with the companies or startups where we intend to invest. So may not be one meeting or conversation should be good enough. It's ideal if you pick up some stake, or you do not pick any stake, but you spend quality time with them in next 2 months, 3 months, 4 months, and you will see the traits emerging that whether this relationship it's like a marriage. So you have to assess at various levels. Spending more time, I think, is the essence.
Yeah. So just to add on the Sumit, so he's our smart angel investor in our group. It's under 30. So even I was influenced with Sumit at the age. This 30 is the age people spend on the career, but he's investing. So it's an interest. He's a fantastic guy, Sumit, and I love and
Neeraj.
Best Sumit.
Yeah, there is Saurabh Agarwal.
Yeah, I'm coming to Saurabh. Yeah, thanks, Sumit. And I'm doing it. Saurabh, I'm doing unmute to you. Please ask the question. Just a sec.
Hello.
Yeah, Saurabh, please.
Yeah. Hi, Rupinder. Wonderful session.
Saurabh, thank you so much for taking time out. Rather, I should be asking questions to you. Saurabh has been a investor for a very long time, and he has a lot of influence, in our friends group, investors group.
Excellent.
I don't know I will be able to do justice, Saurabh, but yeah, let's.
So, Rupinder, my query was around the valuation, because coming from the corporate background myself, right? So once you've got a large company, you do have different parameters of valuation. While we're investing in most of the startups, obviously the value hunting doesn't help, because most of the startups are way beyond their fundamentals. So most of the time we are actually looking at founders, and based on that we are valuing them. How do you actually assess these early stage startups in terms of valuation personally?
Yeah, and this is something which happened with me as well, and I should be sharing that story with me, because I got seasoned investors who picked up stake in my organization. So generally when people approach for funding, particularly those promoters who have a lot of self-confidence and sometimes overconfidence, so we ask a lot of value, and I did the same thing. I asked a lot of value from the investors who were planning to invest in my organization. But what they did was, I think they were extremely smart, and this is how you learn ropes with them. So what they did is, they were just silent on, the valuation in the beginning. What they started doing was they started asking me questions. They started looking through the data, looking at my balance sheets, looking at my patents or IP or everything. And they were able to see the faults, somewhere in between. If your top line is good, they will say, profitability margin is not that great, or if you have an IP, so they will put, a lot of questions on IP. So what you need to do is, first of all, we have to assess whether we want to go with that particular company. And then after that, we will have to find out ways and means to negotiate and find the better way to reduce valuations to the best possible manner. So they came back to me saying that Rupinder, your organization is good, your expansion is good, but you are generally into trading business, and your IP is not that great. Your receivables need a lot of this and that. So it's a lot of balancing which we will have to do once we make up our mind that these 4 startups we really want to invest in. Then we will have to find out ways to negotiate and bring them to some sanity. Of course, it's not that easy as I'm saying, but this is something which I have learned from these big investors so far, that they are very good in, putting you in place and then invest.
Okay, thanks.
That's helpful.
So let me give it to Rajesh. So Rajesh is our co-founder in DFAN. So Rajesh, over to you.
Yeah, thank you so much, Neeraj, and good conversation, Rupinder. Thank you so much for taking time out. My
My
question is
pleasure,
more.
Rajesh.
My question is more related to about that when you are raising a fund from friends and family for the initial startup, right?
Yeah, yeah.
That is more of a confidence level and more of relationships and all those kind of things which are there, which are playing much bigger role than any of the product or anything else, right?
Right,
So how
right.
do you put that valuation in that stage? Because they are just relying on you and saying कि यार कुछ कर रहा है तो ठीक ही कर रहा होगा, so let me just put that. So how do you define there then?
Yeah, again, life is all about balancing. So what is very important is, when people are relying on you and they are saying, okay, we have faith in you and what valuations you are talking about. So in that case, you have to be very balanced enough not to give away too much in terms of equity to them in the beginning. At the same time, also giving them some value so that they can invest with you in the longer run. People do mistake. Initially in my career also, I did that mistake. I gave up too much of my equity too fast. I was trying to be very generous. But then there comes a time when you realize that so proper assessment, I would say, particularly with those who are very close to you, friends and family, give a very justified this thing, try to assess in terms of numbers, or it has to be justified. Don't give away too much, but don't fleece them as well. That's and it will vary case to case, based on the sales, based on the IP, based on the plan.
Just to add, basically, the CCPS is a good option in that case, that whatever the next valuation happen, you get some 10-15% discount on that. That make better sense rather than putting value.
Yeah, I think that's a better sense. So they kind of cruise along with you.
Correct.
And you keep giving them opportunity at various entry points.
Yeah. Great.
Yeah,
Thank
that's
you
a
so
good idea.
Thank you.
Thanks, Rajesh. Thank
you. Even in the very early, the friends and family, it's a very, this is, you can say it's emotional also, right? The emotional plays a critical role where you need to decide what to do and what to, and they are also carrying a risk with you. Yeah. So that's an emotional game, yeah.
Correct.
So let me give it to Rajkumar Kohli. Yeah, Rajkumar, please. Rajkumar, you are on mute. Maybe you have to unmute and speak. Rajkumar. He has to unmute himself. Yeah. Yeah. Okay. I think anybody has any question or a query or so.
I see a question in the Q&A. There is Ramesh Verma asking, Rupinder, can you be a mentor in one and a founder in another?
Yes, of course. No issue with that. You can be mentor to one and you can be part of a founder group somewhere else. Yeah, that's possible.
Okay. All right. So I think that's I don't see any question or that's thanks a lot, Rupinder.
So so I need small support from everyone. There is a small YouTube channel I have, and I keep putting content, which if you can subscribe or run it,
that's a fantastic. Correct. There's a YouTube which give a lot of tips around the sales, around the founder investments. Yeah. Thanks a lot, Rupinder, and really appreciate. And for DFAN, if somebody wants to reach out, please feel free to reach out to us. It's dfangels.co.in. Yeah. Thank you. So Ashima, you have something to speak, or that's fine.
Thank you, everybody, for attending the session. And
thank
do
you,
reach out to
everyone.
us if there is any question at your end.
Really appreciate everyone's time.
So thanks, Rupinder. We'll connect again and look forward more in this type of Gyan session, which is really motivation to the people. And for us also, we are also growing and learning. Every day is a new learning and new things. Yeah. So Ganesh, you
No, definitely.
Yeah. Basically, I
Ganesh.
wanted to check out when do you pivot? And because pivot is a very common word that is used by startups. So at what stage do you pivot? Is it when you build the product and you find that there is a problem and the MVP is not successful? What stage do you pivot?
Ganesh, that's a very good and very technical question. I think it's a thing, you know, which is not very fixed. But generally, I think the time when your MVP or, you know, the product starts getting traction, or, you know, so there is no specific answer to that. But as I said in one of my points, that if you are cruising along with them very closely, so then you will get the idea, no, when is the right time to pivot and what was the time when it was all froth only. So subjective, you know, depends on the case to case. Idea is to spend and move, walk very closely, you know, so you will get a feeling that this is the right time to now kind of move to the next level.
Okay, thanks. Thank you.
Thank you, Ganesh. Thank you.
Okay. All right. Thanks a lot, Rupinder, and we'll do a few more sessions in the due course of time. And thank you.
Thank you, Dheeraj. Thank you for everything, all the efforts.
Thanks, guys.
And I have been tracking you all along, so, you know, I will not leave you.
Yeah, definitely.
Good stuff.
Yeah,
keep going.
We need you. We need you also. You to grow us.
My pleasure. My pleasure.
Okay.
My pleasure.
Thanks.
Okay.
Appreciate it. Bye.
Good day, everyone. Bye-bye.
Good day. Bye-bye.
Bye. Thank you.